So we're looking at 4.3. What we're doing here is we're going to prepare financial statements. There's going to be 4 financial statements that we're going to prepare. The income statements, the first one shows revenue and expenses. There's a bunch of different columns. You get the 2 department amounts. We get some vertical analysis ratios. Basically, I just want to tell you quickly where you find this information. We always do who, what, when at the top. Wiley income statement for year ended. Income statement is for year ended. We have the 2 department total sections. These sections, you find all the information from these from the 4.2 departmental margin statement. Okay, and then you'll add them up going across, so you get the company totals. Then you have all these indirect expenses. You will get these from the 4.1 adjusted trial balance. So once after we made all those adjusting entries in 4.1 and we posted them and we got totals, then we take all those numbers and put them in here. And they're called the indirect expenses. All right. So we have our departmental margin statement numbers here. We add them up to get company totals. We take the adjusting trial balance numbers from 4.1. We get a total. Subtract that to get income before taxes, and then our less federal income tax is also a number from 4.1 adjusted trial balance. That's when we found our federal income tax. You get a new number, net income, that you will use later. So we'll need that number later. These vertical analysis ratios, the component percentages, are all just divided by sales. So you divide that by sales, get a number, divide by sales, get a number. And these numbers are used by departments for seeing if they're acceptable area of or they need to address something somewhere along the lines. But that is the income statement. That's the first one. The second one is statement of stockholders' equity. Now, what is this? Financial statement that shows the changes in corporation's ownership from fiscal period. Basically, we're adding up our stock and retained earnings. If you want to give it very, very simple. This statement is taken from last year's prior statement, stockholders' equity, the income statement, adjusted trial balance. What we're going to do when we do the adjusted trial balance number, or for the statement of stockholders' equity here, you're getting this part from the directions. They will tell you, and you will have to type $1 par value. January 1st, there's so many issues issued for this problem, 2095. If they're $1 and there's 95,000 of them, that's how much money we have in stock. Current year, we put 5,000 shares out there at $1 par, so we add them up. This numbers will be given to you in the directions. Now, retained earnings, you're gonna have to look around a little bit. This is going to be from the adjusted trial balance. We have a retained earnings number. This net income number we just figured out, the 65,000, is from your income statement. The dividends is from the adjusted trial balance. We paid those out. So when you have net income minus the dividends, add your retained earnings to this net increase, and you get that 160. Add it all together, and that's total stockholders' equity. And I think they mentioned retained earnings again. The total shares of corporation as a capital stock, that's what we're talking about there with the $1 par value. And the amount earned by the corporation that's not yet distributed. We don't always distribute into dividends. Sometimes we keep the money for infrastructure, buy vans, buy equipment, buy new printers, buy new computer lab, whatever it might be. But that's the statement of stockholders' equity. You get most of those numbers from the direction up here. Adjusted trial balance, you get this from the income statement. Adjusted trial balance, add them all up. The third one is the balance sheet. So the balance sheet number is coming from, or where we're sections, we have balance sheet numbers, assets, liabilities, and then the statement of stockholders' equity. Okay, so you kind of can remember that. We're taking everything by total liabilities, or total assets, excuse me. We're dividing everything by total assets for our component percentages. We didn't have any on the last statement of owner's equity. All right, current assets are usually cash value items that we can readily turn into cash, is kind of the unwritten rule. Basically, on our adjusted trial balance, it's everything above office equipment. because plan assets is the next title. We want assets into two sections, current and plan. So cash through insurance is our current assets. Now we have a couple things we need to look at. Accounts receivable has less allowance for uncollectibles, so we have to put that on this left side and add it up. Okay, just like when we get to plan assets, again, we'll get this in the adjusted trial balance, but we have so much money put into equipment minus the depreciation, so our equipment's only really worth this much. Our store equipment's worth this much minus its accumulated depreciation for all of it. So it's really, we bought all this stuff for 64,000 number. It's really only worth 21 now, years later. Add the two up, get a number, add it to our total current assets, and that's our total assets. Okay. Total liabilities, these are all the payables that you can see from your adjusted trial balance. It goes all the way down to basically dividends payable. So you see dividends payable here. These come from the adjusted trial balance. Add them all up, get a total liabilities. Stockholders' equity numbers come from the last problem, the 100,000 and 160 for balance retained earnings. The 100,000, 160 from retained earnings, we add them up to the total liabilities, and our assets, total assets should equal total liabilities, stockholders' equity. Again, if they equal, because we're dividing everything by assets, our vertical analysis numbers should be 100% twice. And again, those are just component percentages. Kind of explains it here. What's the balance sheet? It's a report, assets, liabilities, owners' equities. A balance sheet reports financial for a specific day. So when we do who, what, when on this one, it's different because it says December 31st. This one says for year ended. The income statement for year ended. The balance sheet is on a specific day. It just talks about where we get these where we get the numbers. I just told you we have two different categories for assets. You're going to have to subtract because accounts receivable has a contra account. The allowance for uncollectible accounts, office equipment, storeroom equipment, both have contra accounts. The accumulated depreciation that we have to subtract. We talked about that. Liabilities usually typically divided into two categories. We don't have long term, so we just have all those payables. We get information from stockholders' equity, everything we showed, and then we divide by total assets. So I kind of explained that. But you can read through that if you want. Statement of cash flows. Okay, so this is going to be pretty much all from the directions. You're going to have a section they'll say, yeah, it might say like receipts from the customer or cash sales from the customer or cash sales to customers. And then we're going to have all these different payments. Our payments will be in parentheses, meaning we need to subtract them. Okay, you add up all your payments and then we subtract it. Okay, to get this net cash provided used by operating expenses. So all the cash sales or sales to customers, and then all our payments, and it's wages, rent, tax, insurance, our and other operating expenses. We'll add those up and subtract to get our net cash. Now, cash flow from investing activities. All right, we have a sale of equipment. Again, this will be given to you in the directions. And any purchases of equipment is going to be a payment. So sale means we made some money. Purchasing means we paid. So we're negative there. Same with financing activities. What they mean by financing activities, any issuance of stock. We made $5,000 issuing stock, but we paid out dividends of $21,000. So we need to put those in negative, so we subtract. 67,000 minus this 13 minus this 16 gets us net change in cash. A balance is given to you in your instructions. You add those two up. That's what the statement of cash flow says. So you're going to get this information from your directions. You'll add them up, subtract to get your net cash. They'll give you these two numbers. You'll either have to probably subtract the purchase from sale. Same here. Add these negative numbers up, 67 minus 13 minus 16, get a new number for net change, add it to your previous balance. They will give you that number. Okay, so there's some terms here that we could have went to before, I guess. Cash receipts, cash payments of a company is called our cash flow. We want to summarize everything that happened throughout the business activities with this cash receipts, cash payments into the cash flow statement. We have some operating activities, investing activities, financing activities. Operating activities are just cash receipts, payments necessary for day-to-day operations. Investing activities are when we try to earn some revenue with some extra issuing of stocks, those types of things, cash payments. And it also says sale of purchases of plant assets, but any kind of cash receipts, payments, transactions or finances, those will all be involved in there. So when you're looking at this, you got your financing activities from the stock, the sale of investing equipment will be in investments, and then our cash payments, just the way we usually do. So you're going to be using a lot of different information from here. Is pretty much going to come from your directions. When you're looking at the balance sheet, where you're going to get this, most of it's coming from your adjusted trial balance, all the numbers above office equipment for our cash, and you get this numbers from the trial balance as well, all the payables basically from the trial balance. You'll have a stockholders' equity and some stockholders' equity numbers here, but most of this stuff comes from the adjusted trial balance. You're just putting it back onto a new form. The statement of stockholders' equity, where you're getting most of it, is this part will come from the directions. You'll have some adjusted trial balance number, an income statement number, adjusted trial balance number, and that should be about it for that. And then all our income statement accounts are coming from your departmental margin statement from up here. Add them up to get the company totals. These expenses that are indirect come from the 4-1 adjusting trial balance. You get a total of indirect number, and then we get these from the income statement, or adjusted trial balance, excuse me. These are also from the adjusted trial balance. So you just got to use old problems, and you're going to be flipping around screens. If you got a computer, you got a Chromebook, you got 2 computers in the computer lab, and that will be able to help you, whatever you can do at home. Maybe print it out. Maybe it's easier than having 2 screens going, or if you don't have the option for 2 screens.